The New Year's ball drop into 2025 may seem like a long time from now, but our next guest believes that it's never too early to get started on your year-end tax planning, and neither do I. Here to tell us how you can get a jump start is Judy Brown. She is the SC&H Wealth Principal and Wealth Advisor, joining us here on set. Great to have you here in studio with us.
Thank you. Thank you for having me.
Okay, so never too early to get started here, but if you are trying to get started early, where should you begin? Where should the mindset really kind of set a step one for your tax preparation for 2025?
Absolutely. So right now, I think it's just understanding what year-end tax planning is.
Okay.
And basically, tax planning is taking people's personal goals, financial goals, and integrating whatever the current tax laws are to find a tax-efficient way to achieve those goals. So I think first step is looking at what your financial goals are, and then taking a look at your tax returns more carefully. So right now, looking at, we're in September, so it's a great time to hone in on 2024 taxes before the year wraps up. Some things people could do would be to take their 2023 tax return and start to update it with preliminary numbers. We don't have final numbers, but maybe their income's a little higher this year. Maybe it's going to put them in a different tax bracket. Maybe they've had some medical expenses, so they're going to be itemizing, whereas maybe they didn't last year. So at this point, they can start to gather, take the time. It's not fun, but they can take the time to gather the documents, mortgage interest statements, all kinds of things, and just start to plug it in. And that's where the help of a tax professional or a tax advisor can really help. But it'll identify, have they paid enough in this year to avoid a tax penalty? Are they on track with their retirement goals and tax efficiency? So that's kind of the first step right now, I'd say.
I mean, is there any significant change in the filing process that we're anticipating between 2024 and 2025 at this juncture?
Interesting, not so much between 2024 and 2025, but between 2025 and 2026, we are expecting some big changes. And that's because the Tax Cut and Jobs Act, which was signed back in December of 2017, expires or sunsets, at least a lot of the provisions. And some of those provisions are pretty significant. And one that's been talked about a lot is the annual or the lifetime estate and gift exclusion, reducing to about half. But the one that's going to really affect most people, the things that are going to affect most people really is about the tax rate, the top tax rate going up, all the tax brackets shifting. Like the top tax rate is going to go from 37 to 39.6%. The standard deduction is going to go in half. So people that weren't itemizing, that were not itemizing before might be now. So that's when we're going to really see a lot of tax planning that will be very valuable.
Okay, so with that in mind, I mean, we're in the midst of convention seasons. The RNC, we've got through that, now the DNC, and we're hearing a lot more talk from both sides of the aisle about what potential changes could be put forward that have impacts to tax code and legislation that could come forward. Is there anything that voters, people who are filing for their taxes, should be paying close attention to and listening for?
I think they definitely should be paying close attention and trying to see how it's going to impact, again, their personal goals. And that's where, if they can start now with doing tax projections, it's not a 1 year, it's a lifetime of understanding your tax efficiency. And so if they can start to do that, then they'll be prepared by maybe running it if the Tax Cut and Job Act sunsets versus if it doesn't. And then they can make decisions more easily and more quickly depending on what happens.
Absolutely. Judy Brown, she is the SC&H Wealth Principal and Wealth Advisor. Thanks so much for taking the time.
Thank you very much for having me.